Welcome ACC 124 students. So I am Jovic G. Kain, and I will be the one to discuss to you the financial asset at amortized cost bond investment. So the definition of bond is a formal and conditional promise made by or under the seal to pay a specified sum of money at a determinable future date and to make periodic interest payments at the stated rate until the principal sum is paid. So in simple language, bond is an example of a debt security, or bond is a debt security itself and evidenced by a bond certificate under another document also known as bond indenture, in which the bondholder is the creditor and the issuer is the debtor. Now, for the classification of bond investment are classified as either current or non-current depending upon the business model of managing financial assets. So, kumbaga, depending upon the purpose of why the company acquired that particular investment. So, it may be classified as financial asset held for trading, financial asset at amortized cost, financial asset at fair value to OCI or other comprehensive income, and financial asset at fair value through profit or loss or revocable designation or by a fair value option. So I know we are done with yung letter A, C, and D, and our focus here is the discussion of financial asset at amortized cost. Yeah. So for initial measurement for non-trading, general rule is that it is fair value or FV plus TC, or shall we say FV, which is the fair value, TC is the transaction cost, directly attributable to the acquisition of the investment. Now, if it is for trading or at fair value through profit or loss, the general rule is that it is measured at fair value or FV. Now, the question, what will happen to transaction cost? Transaction cost is expensed outright. Now, for subsequent measurement, so the investment subsequently measured at fair value through profit or loss, or amortized cost, or fair value through other comprehensive income. So let's start with the acquisition of bond investment. So bond investment is acquired either on interest date or between interest date. So walang problema if it is acquired on interest date or exact interest date. So it's because the purchase price is equivalent to its acquisition cost. While if it is between interest date, you need to pay also, aside from the acquisition cost of the investment or yung cost talaga ng investment, plus the accrued interest. And accrued interest should be accounted for separately to either interest income or accrued interest receivable. So again, if it is on interest date, walang problema. Automatic, the purchase price is the acquisition cost. While if it is between interest date, you need to add the accrued interests. Ayan. So in terms of accounting for this one, let's have for example, the transaction here is April 1. On April 1, purchase 1 million 12% bonds at 96. So yung 96, this is not just 96 pesos. This is actually the quoted price of the bond, which is 96%. So 96% po yan. Hindi yan siya 96 lang or 96 pesos. Plus accrued interest, and then interest is payable January 1 and July 1. So as you can see, the acquisition date is April 1 and the interest dates are January 1 and July 1. So the acquisition or the bonds acquired between interest date, between January 1 and July 1. So the bonds are held as trading investment. So first one, the first approach is here to recognize the securities 960,000, and then you debit also the accrued interest receivable 30,000, and that will be the total cash payment 990,000. So how do we compute the 30,000 accrued interest receivable? So it is computed as follows. Note that accrued interest is for 3 months. So baka siya 3 months kasi nga January 1 to April 1. So January, February, March. So 3 months. The computation of the accrued interest is therefore 1 million, the face amount of the bonds, multiplied by 12%. So, saan galing yung 12%? Ito, the nominal rate. Multiplied by 3 over 12. So, 3 months over 12 months. So, that is 30,000. So, that's why we debit here under the first approach as accrued interest receivable with 30,000 amount. So, the approach number 2 naman is that you debit instead of using accrued interest receivable, you debit here interest income. Okay? So, both are acceptable, by the way. Ayan. So, whether it is for approach number 1 or approach number 2, okay lang. Walang problema. But then, later on, okay, so let's try the next one. July 1 receives semi-annual interest. So what you're going to do, you just debit cash for 60,000 for the semi-annual interest. And then, as you can see, we credit accrued interest receivable for 30,000. And credit interest income, 30,000. While for approach number 2, so to make it, or the simple entry is just cash 60,000 and interest income for 60,000. So by the way, according to Valix, the above approach or this approach number 2 is more convenient and will be followed for the illustration in the following examples. Okay? So this is the difference, or these are the difference. Kumbaga, if you're going to use approach number 1 or approach number 2, usually the difference is yung at the moment of acquisition. Ayan. Kasi nga, instead of using interest receivable for approach number 1, for approach number 2, it uses interest income. Ayan. Now, for the interest income, they do have the same interest income actually. So, for approach number 1, interest income is 30,000. But for approach number 2, same pa rin po, no? 60,000 yung first entry, minus 30,000, 60,000 yung second entry, that's one, credit entry. Then, minus 30,000 as entry kanina, for first entry. So, meron siyang 30,000 as the total or the balance of the interest income. Okay, so whether approach number 1 or approach number 2, you would arrive with the same interest income. Okay. And so, the next one, transaction is December 31, recorded the accrued interest from July 1 to December 31. So, you just debit accrued interest receivable for the accrued income and credit interest income for 60,000. So, why is this accrued interest receivable? It's because the payment is January 1. And you're going to record December 31 for the annual cut-off, right? For the year-end cut-off of the income. Okay. Then, for the last entry, December 31, the bonds are quoted at 110 at the end of the year. So, 110, this is 110%. The quoted price of the bond. Changes in fair value of the security are recognized in profit or loss. Yes. Diba, remember? If you're going to record trading security, any changes in the fair value from the initial measurement to subsequent measurement, you're going to recognize that one in the profit or loss. Either unrealized loss or unrealized gain. So in this problem, as you can see, we debit trading securities for 140,000 and credit unrealized gain for 140,000. It's because the market value is not increased. 1 million times 110%, so meron siyang 1,100,000 less the carrying amount of 960 at the beginning, so meron siyang increase or unrealized gain at the end of the year na 140,000. Ayan. So, note that when the bond investment is held for trading, as you can see, or measure the fair value through profit or loss, it is not necessary to amortize any premium or discount. So as you can see, we did not amortize any premium or discount here since this is, or the bond is measured at trading securities or trading or held for trading. Ayan. Next one is that investment in bonds at amortized cost. So as you can see, subsequently, the bond, it may be measured at fair value or amortized cost. So for amortized cost, the financial asset shall be measured at amortized cost only if the first one, the business model is to hold the financial asset in order to collect contractual cash flows on specified dates. So para siyang yung number, letter B, contractual cash flows of solely payments of principal interest and interest on the principal amount outstanding. So if the purpose of the financial asset is to collect interest or di kaya staggered payment of the principal, so the financial asset is measured at amortized cost. Ayan. So, amortized cost is somewhat similar with present value. So, present value. So, to compute for the amortized cost, initial amount invested, less any repayments made, plus amortization of discount, less amortization of premium, then less if there is any impairment, loss, or uncollectability. And that is amortized cost. So let's discuss amortization of premium and discount. So investment in bonds are subsequently measured at amortized cost. Yun nga, kasi depending upon the purpose, if it is for solely payment of principal and interest, that is amortized cost. Then hence any premium or discount is included in the acquisition and must be amortized as well. So in terms of discount, you're going to record that one as debit to investment in bonds and credit to interest income. And for amortization of bond premium, we debit interest income and we credit investment in bonds. Okay? So dito, addition to interest income for bond discount, while for bond premiums, deduction sa interest income. While for the investment, sa bond discount, it would increase the amount of investment in bonds, while for bond premium, it would decrease the amount of the investment in bonds. That's why the concepts on amortization is that premiums and discount are amortized in order to bring the carrying amount of the investment to its face amount on the date of maturity. So, number 2, bond premiums loss in part of the investor, or it's because you pay more than what was actually the face amount of the bonds. So, malaki yung binayad mo for the acquisition of the investment in bonds. That's why that is loss in your part. But that loss is not automatic as loss, but it will be amortized. Okay, depending upon the method to be used. So, bond premium is a loss, and premiums will be deducted from the interest income. Okay, so it is not loss entirely, but it will be allocated or amortized, and it will be charged to interest income. So, it will decrease the value of interest income. So, parang yung loss, no? Kasi supposed to be ito yung income mo, but then later on, nagka-loss ka, nag-amortize ka ng premium, nade-decrease yung interest income mo. But for bond discount is a gain on part of the lessor, it is added to the interest income. So, bond discount in which you pay less than what was actually the face amount. So, kumbaga, mura lang yung pagkabili mo sa investment in bonds. So, if that's the case, that is a gain, right? But it does not automatically recognize the gain, but it will be recognized as amortized and it will be added to the interest income. Ayan. Okay? So, ito. Now, for other types of bonds, callable bonds naman are those which are called in or redeemed by issuing entity prior to the date of maturity. So, kumbaga, it can be redeemed before the term. So, if that's the case, you are to recognize any gain or loss. It will be charged to profit or loss. Okay? Profit or loss is equal to redemption price less carrying amount of the investment. Now, for convertible bonds, those are investment in bonds which give the investor the right to exchange their bonds for share capital of the issuer at any time prior to maturity. So, kumbaga, from financial liability, magiging equity security siya. So, from liability, magiging equity siya. So, from bonds, magiging share capital. If that's the case, the bonds is called as convertible bonds. For serial bonds naman, so bonds that have series of maturity dates or those which could be paid in installment. Okay. So like for example, this one, a 3 million bond issued July 1, 2019 may provide a bond with mature as follows. December 31, 2019, 2020, 2021. So yearly, mababayad siya ng 1 million. So if that's the case, the bonds is considered as serial bonds kasi meron sa series of payments. Series of payments ng principal amount. Now for the term bonds is bonds that are bonds that mature on a single date. So parang siyang one-time payment. So callable and convertible bonds can be classified as term bonds despite their special features. So one-time payment siya. And then let's discuss the different methods of amortization. So there are 3 different methods of amortization. Maybe straight line method of amortization, which equal in amount of premium or discount for each accounting period. So every year, it would have a uniform amortization. But for bond discount, applicable only to serial bonds. So provides for a decreasing amount of the amortization. And lastly, for effective interest method, increasing amount of amortization using the effective interest rate. So we will discuss letter A at letter B in this part po. And for the next part naman, or next video, is yung effective interest method. So let's start straight line method of discount. So on straight line method of discount, given the following, the face amount of the bonds is 2 million. The acquisition cost on January 1, 2019 is 1,850. So as you can see, meron siyang discount on the bonds na 150,000. So bakit siya discount? Kasi nga, since the face amount is greater than the cost, the bond investment is issued at a discount. So take note, the face amount is 2 million, but you acquire it only at the cost of 1,850. So kumbaga, meron kang gain. Right? So that is discount on the bonds. But syempre, hindi yan siya entirely as gain automatic, but you will amortize that one and it will be added sa interest income. So the date of the bonds, January 1, 2019, and the maturity is January 1, 2022. So ilang years ba? 19, 20, 21, so 3 years. Ayan. Interest payable, semi-annually. So semi-annually, twice a year. So every 6 months, June 30 at saka December 31 for 12%. Then, following the straight line method of amortization, discount is simply computed as follows. So as you can see, the discount here is 50,000 uniform, no? 2019, 2020, tsaka 2021. Paano ito kinompute? So 150,000 discount divided by 3 years. Ayan. 3 years yung total, right? Total term of the bond. So, meron siyang 50,000 annual discount amortization. So, in terms of the journal entry, so the acquisition on January 1, so you just debit investment in bonds at cost 1,850 and cash for 1,850. And then for the second one, collect the semi-annual interest on June 30. So, 2 million times 12% na nominal rate times 6 over 12 kasi nga 6 months, right? Semi-annual. Or 120. So you just debit cash for 120, then credit interest income for 120,000. And then another collection for semi-annual interest on December 31. So meron siyang cash for 120, and then interest income for 120. And annual amortization of discount, ayan. So since, diba, 50,000 every year. So you just debit investment in bonds for 50,000. And syempre, since this is discount, it would increase the amount of interest income, 50,000. So, these are the journal entries for 2019. Now, for the next one, let's try naman premium. Ayan. So, premium. So, what they're going to do, again, determine the premium. So, since this is premium, it's because the face amount is less than the cost. Kumbaga, mahal yung pag-acquire mo ng bonds. Kasi nga, 2,200,000. is the cost of the bonds, and then the face amount of the bonds is only 2 million. So, meron siyang premium on the bonds. Para siyang loss on your part. And then, date of the bonds, January 1, 2019, January 1, 2023. Interest payable annually. So, annually, 12%. So, once a year lang yan, annually. Following the straight line method, annual amortization simply computed by dividing the premium of 200 by the life of the bond. So, same pa rin po, no? 50,000. So, this is premium, ha? Yan. Hindi yan siya discount. So, 200,000 na premium total divided by 4 years. So, para lang sa depreciation. Kasi parang cost lang divided by estimated useful life. Kapag may salvage value, less mo lang. But in this case, the total premium divided by 4 years. Ayan. So, meron siyang 50,000 annual premium amortization. So, the journal entries here are as follows. So, the acquisition, investment in bonds at cost 2,200,000, then cash at 2,200,000. Then, collection of semi-annual interest, and this is not semi-annual, this is annual interest for 240,000. So, 2 million times 12%. So, meron siyang 240,000. Cash for 240, then credit income for 240. Then, for annual amortization of discount, so you just debit interest income. Kasi nga, premium siya, no? It will decrease the amount of the interest income. Then, credit investment in bonds for 50,000. Now, for the next one is yung bond outstanding method. So, discount. So, same pa rin po. First is you have to determine the total amount of the discount. So, discount here is 100,000. 2 million, the face amount of the bonds. And then, acquisition cost is 1,900,000. And same pa rin, since the face amount is more than the cost, the bond investment is issued at a discount. Yeah. So, annual installment on December 31, 2019 and every December 31 thereafter. So, 500,000. So, as you can see, meron siya series of payment. Annually, magbabayad siya ng 500,000. So, dito papasok yung bond outstanding method. Kasi applicable lang ito for serial bonds. Date of the bonds, January 1, 2019. Interest payable semi-annually. So, June 30 tsaka December 31, 12%. So, what you're going to do, you're going to create this one, itong table. For year, bond outstanding, fraction, and discount amortization. So, for the year, so bakit siya 4 years? Wala naman nakalagay na 4 years. Diba remember, the face amount of the bond is 2 million. Then, every year, magbabayad siya ng 500,000. So, ilang years ba yung kailangan? So, dapat, within 4 years, okay, babayaran niya lahat or yung total amount or yung face amount ng bonds. So, that's why 4 years. 2019, 2020, 2021, saka 2022. And then, bond outstanding, this is 2,000 starting, decreased by the payment of 500 each year. So, 2,000 for first year, 1,500 for second year, 1 million for third year, then 500 na lang yung 2022. And out of the bond outstanding, gagawa ka ng fraction. Okay, the fractions are developed from bond outstanding column. So, first one is 2 million divided by 5 million or 20 divided by 50. Then, 15 divided by 50, 10 over 50, and 5 over 50. And the last one is yung discount amortization. So, this is the annual discount amortization computed by multiplying the fraction by the amount of the discount. So, like for example, this one, for 2029, 20 over 50 yung fraction multiplied by the total amount ng discount. So, yung first year or 2019, meron siyang amortization of 40,000. And so on. Ayan. So, that is how to compute for the amortization, discount amortization using bond outstanding method. Now, for the journal entries, same pa rin po, no? The bonds recorded at cost, so investment in bonds for 1,900,000, then cash for 1,900,000. Then you record also the semi-annual interest. So cash for 2 million times 12% times 6 over 12 or 120. then interest income for 120. And then, additional na po no, na semi-annual interest na 120 and the amortization of the discount. So, you debit investment in bonds for 40 and since this is discount, it would increase the amount of interest income to 40,000. And syempre, since this is serial, no? Serial bonds, so meron siya first installment, 500,000. Ayan. And for 2020 naman, so, record the June 30 semi-annual interest. So, 1.5 na lang yung base kasi nabayaran na yung 500. Times 12% times 6 over 12. And that interest income for 90,000. Then, second entry, same pa rin po, semi-annual interest. And the amortization of the discount. Investment in bonds for 30 based on the table. Then, credit also, interest income for 30,000. And the second installment. Cash for 500 and credit for investment in bonds for 500,000. Ayan, so that is how to record bond outstanding method discount. Now, for bond outstanding method premium naman, ayan, so madali lang, same process lang yung kanina. Okay, so determine first how much the total premium on the bonds. In this case, 200,000 is yung premium ng bonds. How come it is 200,000? Compute lang ng difference ng face amount of the bonds at saka yung acquisition cost. And since the face amount is less than the cost, the bond investment is issued at a premium. Okay. So, the annual installment is 1 million na. Okay, malaki na, 1 million na. Then, date of the bonds is January 1, 2019 and the interest payable annually on December 31 for 12%. So, first things first, syempre gagawa ka ng table for the year, bond outstanding, at saka fraction and premium amortization. So, for the year, to compute for the year, how come it's 4 years, no? So, hindi kasi binigay sa problem lang year. Ayan. So, makakompute nyo naman. Face amount for 4 million divided by annual installment na 1 million. So, meron siyang total years na 4 years. So, 2019, 2020, 2021, saka 2022. Now, compute for the bond outstanding balance at year-end. So, for 2019, beginning 4 million, 2020, beginning 3 million, 2021, 2 million, and lastly, 2022, 1 million. So, meron siyang, yun nga, deduction, decrease by 1 million each year. And based on the bond outstanding, gagawa ka ng fraction. So, 4 over 10, 3 over 10, 2 over 10, 1 over 10. So, 4 million over 10 million or 4 over 10. And compute for the premium amortization. So, to compute for premium amortization, the annual premium amortization is computed by multiplying the fraction by the amount of premium. So, the fraction of for the first year or 2019 is 4 over 10 times the total premium na 200. So, meron siyang 80,000 as amortization for the year 2019 and so on. So, 60 for second year, 40 for third year, 20 naman for 2022 or the fourth year. That is how to compute for premium amortization using bond outstanding method. So, for journal entries again, first one is to record the acquisition. Ayan, acquisition of the investment in bonds. So, debit, 4,200,000. Then, cash for 4,200,000. Then, record the annual interest. 2 million times 12%, so 480. And the interest income for 480. And since this is premium, it would decrease the amount of the interest income. Sayang. Interest income for 80. Investment in bonds for 80. Amortization of premium for 20. And lastly, to record the first installment. So, cash for 1 million, then credit investment in bonds for 1 million. And, ayan. End of presentation. So, thank you very much for listening po. Goodbye po.